Let's take a look at our dollar value in our crude oil for you and get you caught up there. A lot of interest in these, of course, day to day. And currently on the dollar index value, we have the March futures now trading about 30 points lower. It is at 96.430 as it stands right now. If we go to the energy markets, let's take a look at our crude oil trade. West Texas Intermediate crude, to be more exact. And right now, we have that April contract trading at 57.37 on the day, and that would be up 41 cents. Meanwhile, on the heating oil trade, where we derive our prices for diesel fuel, we're down about 0.4 of a cent on the March futures. We're trading at 203.2 per gallon at the current time. Corn and soybean trade has kind of evened out here so far today. The corn market has March trading just a half-cent higher at 3.76 per bushel. And we have the July coming in there a penny higher at 3.93 1/4. The new crop December is at 4.02 1/2, and that would be 3/4 of a cent higher. In the soybean trade, after we got all the export sales data that came out this morning to get us caught up from January 4th, the soybeans actually had a kind of a negative reaction eventually. After the open, they drifted lower. Then they have come back now at midday. March beans now 2 1/4 higher. Last trade is at 9.13 1/4. So we're back within a penny and a half of our high of the day, but we are off of our low by about 6 cents. July soybeans currently 2 1/4 higher. We are trading now at 9.39 3/4. And November soybeans currently trading about 2 higher as well, and they are at 9.56 1/4. Now, if you look at the wheat trade in Chicago, we have the March contract 1 3/4 higher at 4.88 1/4, and July now 2 higher at 4.95 1/2. Kansas City on the March contract, it's trading 4 higher now at 4.59 1/4. However, July new crop only 1 3/4 higher at 4.75 1/4. And if you look at the Minneapolis trade, that one has been leading the charge today. Nearby March, check it out, 14 1/4 higher at 5.72. Let's go to Chicago, find out what the talk of the floor is. We'll talk with Scott Gecas, and he, of course, is with Walsh Trading. He joins us right now. Minneapolis wheat, that's kind of unusual to say that that's the market leader. How come?
Yeah, it's a big shock. A lot of this has to do with the trade war talks, positive trade war talks coming out. The fact that wheat was even mentioned in the trade war talks was a little bit of a much more bullish catalyst than expected. So that's one of the reasons why you're seeing a little bit stronger tone in the wheat market in general.
It's kind of interesting because the spring wheat isn't even in the ground yet. It's not like we have any weather risk or anything in that regard. So interesting dynamics at work in the wheat complex. As far as the corn and soybeans go, a lot of producers out there in the Midwest, the upper Midwest especially, they can't even haul grain to town because of all the ongoing snow out there. I'm hearing cast basis levels are really firming up.
Yeah, with the weather coming in, that's definitely starting to play a much bigger fact into all the prices rather than just a headline. So now that some of this trade war talk is starting to tone down a little bit, the details have yet to be coming out, so we're still going to keep an eye on the headlines coming across, but the weather is definitely becoming more of a factor, especially with, like you said, the snow coming in the next few days here. So we're going to keep an eye on the weather as well as the headlines. The trade war talks, the positive news came out, stopped the bleeding a little bit for the commodities across the board. So that's why you've seen a little bit firmer tone in the commodities other than the last few days. But we're going to see how this is going to play out through the next 5 days or so.
Kind of quiet heading into the weekend here in most contracts. All right, Scott, we'll come back in Monday and we'll take a look at what's going on in cattle and hog trade as well. Scott Gecas is our guest. We'll be right back. Let's pick up where we left off. We're talking with Scott Gecas, and he's with Walsh Trading. He's at the edge of the trading floor in Chicago right now. And as we shift our focus over to the livestock trade, of course, we had some export sales data that came out regarding the beef and the pork, but because it was an accumulation of all the sales that took place over the last 5 weeks, a lot of traders don't really know what to do with that. Some more current information. We have new beef cutout values and some new pork carcass cutout values. Let's take a look at what we have here. They came out here at midday, and a higher tone in the wholesale beef trade. Choice cuts up $1.32 at $219.39, and you have selects now 78 higher at 212.19. That means that spread is $7.20 between those two. If you look at the pork carcass cutout values, now here we have more of a mixed effect on the primal cuts. Carcass values down a couple of pennies at 61.21. The loin market 79 cents higher. The ham market today down 56 cents, and the belly market is about 31 cents higher at 105.88. Now on the futures trade, let's go ahead and take a look at our cattle and hog markets here for you. Currently on the live cattle first, we are showing April about 33 higher at 128.93. Kind of a fairly narrow trading range here for a change. We have June 20 higher at 119.45. On the feeder cattle, we currently have the market trading mixed. The March down 3 cents at 143.20. The April also down 1 tick, 3 cents lower at 145.50, while the May is 20 higher. And on the lean hog trade today, as we head toward the weekend, we have the April 33 lower at 55.63, the May a nickel lower, and then you have June and July both higher. June is actually up 48 cents at 76.15, and that's already at about a $21 premium, or at least a $20.50 premium on the lean hog trade. So, Scott, we have a couple of big reports coming out here in a little bit. Cattle on feed report and cold storage report. Do you think there could be any surprises there?
Well, we're going to wait and see. I mean, that's the thing with all the data coming out. No one knows what's actually going to happen. Volatility is elevated going into these reports. That's just normal. That's not out of the ordinary. The trend in cattle alone for the last 7 to 10 trading days has been by the dip. So cattle's been unusually strong. We're running into that cycle where seasonal demand tends to pull off. I don't know if we're going to see that or not. We're still running into the other fact where first to second quarter production is at 11-year highs. So we're going to wait and see what that report comes out. That's going to dictate which way we're going to go. Either way, though, the 130 calls have been active pretty much for the last 2 weeks. So we're going to wait and see how that's going to happen.
And just to reiterate, some traders said that they will probably kind of take that with a grain of salt because even this is dealing with delayed data. So we'll have to wait until March, I guess, to get totally caught up. Good to visit with you, Scott. Thanks for all the information on the markets, as always, and hope you have a great weekend. Scott Gecas of Walsh Trading, he's located right there in Chicago, so that's how we're getting set up. Heading into the reports a little later on. They are going to be out in a little over 2 hours from right now.
2 p.m. Central Time.
Central Time.
Okay.
Right.
Thank you so much, Markets Editor Marlon Bowling.